McDonald's served up earnings early today. Let's dig in with Matt Todd. He's retail director at S&P Global Ratings. Thanks for joining us today.
Hi, thanks for having me on.
So McDonald's saw close to 4% sales growth at its stores that have been open more than a year. What proved to be profitable for them? And also, why do they only look at stores that are open more than a year?
Okay, sure. Yeah, so they're like you said, their comparable sales were up nearly 4%. And that's up from flattish last quarter. And EPS was up 10%, so even better. In the U.S., which is an important market, comp sales were 2.5%, and that was a big reversal from 3.5% in the quarter before. So what's driving that in the quarter? That's a couple of things. One, they had a successful Minecraft promotion. The word there is that sold out ahead of expectations. Second, it's really what we think and what the company is commenting on is a trade-in from higher income consumers. So while the lower income consumer, which has been their core customer in normal times, is down, actually traffic for them down 10%, but they're making up for it with traffic from middle and higher income consumers who are also spending more. So ticket was up, and so that helped the quarter as well.
Interesting. Okay, and why do they look at restaurants that are established outside of a year? Is there any reason for that?
Yeah, they adjust for currency as well as existing restaurants, and that really just gives you a picture of what a mature McDonald's restaurant is producing, rather than having noise from startup delays or things like that.
Got it. So the company did well outside of the U.S. Is that unusual for McDonald's, and what outside markets did gain?
Right, and so McDonald's in the U.S. is it's a very mature market. There are restaurants on every corner, as you know. So in where they're expanding places like China, where they expect to open 1,000 restaurants, they're not cannibalizing local restaurants. So those have a faster ramp up. They're also not as stark or steep competition in those markets. So they're seeing just in general greater comparable sales, and that's been going on, and that's something you'll see not only with McDonald's, with competitors as well. So we expect that to continue. I think that's why the U.S. comp sales really reversing from the first quarter was notable, just because that is a mature market.
You mentioned consumers, low-income consumers, weren't spending as much as at the start of the year, especially in the U.S. Now that you're seeing some growth, could it signal a bit of a turnaround, in particular for that group?
For the lower income,
yes.
Is that your question? The lower income consumer is really strained in the U.S. right now, and I think that's true also really globally. I think there's a lot of economic uncertainty. Traffic is down, and it was down even more this most recent quarter. And I think this is a continuation of something we've seen and a result of really this inflationary cycle we went through over the last few years, that I think everyone saw wage increases, but higher earners saw a greater portion of that. And at the same time, they had assets that have appreciated over that time. So the lower income consumers who may not have savings or assets, haven't benefited as much. And so we've seen that kind of the tale of two economies right now continue. And I think what McDonald's reported just shows that hasn't changed, and maybe even be getting worse at the moment, again, with increased uncertainty over the last couple of quarters.
Are there plans for any new menu items? Are they sharing forward plans for the company?
Yeah, absolutely. I think when you think about the quick service restaurant sector, the QSR sector, fast food, really what they're leaning on really heavily right now are a couple of different things. So it's limited time offerings and discounting. And the limited time offerings is what you're talking about, new menu offerings. So they have the wrap, the snack wrap that recently launched. And although that's not going to show up in the last quarter, that's something they gave a short commentary on, that's having good uptake. As well, coming out of their Cosmics drink concept, they're starting to launch and test that in other markets in normal McDonald's restaurants. So they're having new drinks that are refreshers. They're having flavored coffees, things that are been really popular with Starbucks and Dunkin' Donuts in the U.S. So they're looking for additional sources of revenue, and especially additional very profitable sources of revenue for their franchisees. So still in a test phase, but we see that as potential driver, not only in the second half of 25 and in 26 for some additional same-store growth.
So who does McDonald's compete with at this time, and how are others in the space doing?
well, McDonald's, I think, competes with everyone really, because folks are, when they decide to go to McDonald's, they're deciding, do I go to the grocery store to eat at home? Do I go to a casual dining restaurant, or maybe fast casual? There's real heavy discounting in the casual dining space right now, where you might be able to get a hamburger, a cheeseburger with a drink, with French fries for a comparable price to something at McDonald's. So I think there's very steep competition right now. And I think where McDonald's has been playing well is with their discounting, with their $5 meal in the U.S., with, buy one, get one, as well as driving more consumers to the app, because we know, not just with McDonald's, but all QSR talks about how if you can get mobile ordering to increase, you see larger check sizes, more ordering per order, larger orders.
Interesting.
And that's driving higher profitability for the franchisees.
Just on the corporate level, are they showing any more discipline in management during more difficult times?
Right. So McDonald's has been through this before, so they have a playbook. This isn't the first time they've been through an economic slowdown or economic uncertainty. And I think something we're expecting this year is for costs to pull back a little bit. And I think even though there's a lot of uncertainty with their consumer, we do expect EBITDA margins to actually improve this year. And so that I think McDonald's, that just shows that the discipline that they have, the experience that they have, having gone through different cycles. And you asked earlier how others are faring. I think it's a mixed bag in QSR, and I think what I'm looking at is traffic, and the traffic is still down. I think McDonald's, even though they had a decent quarter, it sounded like, they didn't say this explicitly, but traffic was still down for the quarter overall. And I think that's true, across the QSR space. Again, the lowest income consumer, who is the core customer typically in the quick service restaurant space, still under pressure.
Got it. Matt Todd is the retail director at S&P Global Ratings. Matt, thanks for joining us today. Appreciate